So next up are trend lines. What is a trend line? Well, a trend line is a straight line that connects two or more points on a chart in order to identify a trend. So let's go back to our chart where we already drew in support and resistance areas. And let's try to get rid of those just for the moment. If you go here to this tab, to the object tree, right? You can hide basically everything you don't want to be shown, and later you just toggle this and it shows up on the chart again, right? But just now, in order to have a clean sheet, let's hide those. Right, so let's zoom out here again, make sure we are here on the monthly. And in general, what we can see here is there was a general downtrend, right? From the 70s, here at the highest point at 355, and to the lowest point in 2011 at 73. So let's draw this line here. Let's see if we can make out a trend line. Right, I think. Right? So we see we have here 1, 2, 3, 4, 5, 6, 7, 8 touch points. So this would be a general downtrend, right? So that's a trend line. When we have a market in a downtrend, the line is drawn above the price action to connect the highs, right? This is called the resistance trend line. So we had here a general downtrend with several price rejections, right? But here we had a breakout, right? So this is a novice breakout here in March 21, right? But here a general downtrend. If we zoom in, we can see here several other downtrends inside of the major downtrend, right? Because this would be one, right? We have here 1, 2, 3 areas that acted here as resistance, and here as support as well, right? Or here as well as resistance, here as support. And this is a trend line. Let's check here an uptrend. When the market is as here in an uptrend, the trend line is drawn below the price action to connect the lows, and this line is called the support trend line. Let's make this here. If we go to this, right, this would be a trend line because we have here the low and here multiple rejections, and this is quite a steep uptrend, right? As well as here, something like that maybe, right? Here 1, 2, 3, 4, 5 touch points. Here would have again a downtrend, right? So yeah, those are trend lines. And if we zoom in, if we go to the weekly, right, we have here an uptrend. Well, let's try to connect those here. Something like that, right? Let's go down to the daily, and we can see here this is more granular. We have a downtrend here inside this general uptrend. Here as well. An uptrend here. Another one here. This one here. Right? So it's important that it's not perfectly drawn, right? Because we have here some breakouts, but in general, this is an uptrend, and we have here multiple areas where the price got rejected. Right? If we would have drawn this line only based here on those 2 or 3 touch points, right, we would have seen here several future rejections. And yeah, here another one, right, like this, or like this, several touch points here. And you can go even down to the intraday time frame, and you will find a lot of areas where you can draw trend lines in, right? So this is it for trend lines. I think that you get the gist here as well. And yeah, let's go back to the presentation. Some key areas or some key takeaways. A trend line is a straight line that connects 2 or more price points on a chart. Trend lines are used to identify the direction of a market, as well as support and resistance levels. When a market is in an uptrend, the trend line is drawn below price action. In a downtrend, the trend line is drawn above price action. And a steeper trend line indicates a stronger trend, and a shallower trend line indicates a weaker trend. Trend lines can be used in all time frames, from intraday charts to weekly and monthly charts. They can also be used on different types of charts, such as bar charts, candlestick charts, and yeah, point and figure charts, you name it. Yeah, that's it for the trend lines. And let's hop over to the next lesson, to chart patterns.